Welcome back to another edition of Sunday School here with your boy Buck Bandit P, only on the Financial Corner. Appreciate y'all for being here. For my new people out there who don't know what we do, we just break down investing for average everyday people so we can go out here and get this money. Yeah, me? But listen, it ain't no excuses, no shortcuts, only progress. We trying to build real lasting wealth, something we could really pass down to our kids. Generational wealth ain't just a buzz term around here. We putting the work in. So before we get started, you already know, man. Click the link if you want your free stock, your free share of Robinhood, man. You already know, use the link down below. You get a free stock, I get a free stock, so you can get off the sidelines and start printing some of this money with us, you heard me? And also, if you ain't got your high yield savings account yet, first of all, you're tripping. But secondly, click the link right there and you can get your high yield savings account with Allah, man. You get a free $100 just for doing it, just for doing the right thing. How about that? You already know, man. It ain't just a Spike Lee thing over here. We doing the right thing, you hear me? So let's get right into the episode, man. Let's get right into why everybody here today. We already went over the Fed and what they do last week and how interest rates control everything, and how if you ain't, you know what I mean, up on that knowledge, trying to get a crazy bag and run the numbers up the God knees and all that is really pointless because you don't even understand money. So if you missed that episode, just go tap in. You know what I mean? Go check that out and then come back and start watching this. So let's get right into it, man. Why the middle class feels like it's disappearing. Like, why does the middle class feel like it's disappearing? Yo, like, it was a point in time. I remember that, like, I'll put my age out there. I'm gonna age myself. I'm 39, I'm going on 40. You know what I mean? I remember my granddad, my grandfather, my Poppy, you know what I mean? Shout out to Poppy, you know what I mean? Rest up, OG. You know what I mean? He had one job, worked for the Philadelphia Water Department, you know what I mean? And he supported the whole family. Like, even though it was just me and my grandma, but my grandma lost her job, she ain't even went back to work. She ain't worked for the last 20 years of her life. Like, you know what I mean? So he took care of everything just off of one income. Like, nowadays, that's not the case. You ain't just taking care of a family off one. And we lived very well, I would say. Like, I was one of them spoiled kids. Had everything I wanted. We went on vacation. Like, I had all the clothes. Like, he bought my first car. Like, I was spoiled to death off of one Philadelphia Water Department job. Like, how was that the case back then? And now it seemed like that's not the case no more. Well, let's get into it. You know what I mean? What do all of that actually mean? You know what I mean? Like, what it mean is the game has changed. It ain't my grandmom and grandpop time no more. That was almost 30 years ago at this point. You know what I mean? I was a buck. You know what I mean? I'm about to be 40. So that was 30 years ago. You could take care of a whole family with one income. Now that's not the case. And it's not because people dumb and people lazy and people. It's just you don't understand the game. So you keep working harder and you think that's going to get you out of the hole, but it's not going to get you out of the hole because you don't understand the whole game. So let's break it down. What middle class used to be, like I said, one income could take care of a whole household. Like, we used to go on trips, vacations, all that. Like, it was cool. Like, job stability actually meant something back in the day. Like your pension was guaranteed up to a certain point when they was like, nope, we ain't giving them joints out. Companies went under, your pension going. And like, that was a real thing back in the day. Back in the day, you could go get a 9-to-5, work hard at this job, buy a house with that income from said job, and build your wealth that way. The old-fashioned way. We all heard of grandma bought the house for $20,000 in 1920. Now it's worth $250,000. And it's just, we don't know what to do with the asset. So what we do is we fight over it so we can get some money and sell it. And then we sell grandma's house. And then 20 years after that, that $250,000 house now worth $500,000. And now they all looking crazy like, no, we shouldn't have sold it. Yeah, you should never sell. That's the whole thing. You got to borrow against it. But don't worry about it. Y'all already know people who tapped in, but I'll do an episode on that, I'm pretty sure. But yeah, so one income could support a whole household. Like job stability was real. Like it was work, you earn, you buy some real estate and you retire. Like that was really a formula. That's not the case no more. The game has changed. So what is the game that changed? Let's get into it. A few things changed. The cost of living is not what it was in 1990. Let's just start there. The cost of living was not what it was in 1990. Also, the wages, what these companies are paying people are not keeping up with the rate of inflation. So even if you do get a raise, you get a little 1%, 2% raise, inflation went up 3%. Like, so you still behind the 8 ball, even though you like, all right, bet I got a raise. Now I'm gonna work more and put more hours in, but you ain't realizing your cost of living is going up and your wages ain't even keeping up with inflation. So you still behind the 8 ball. Also, debt has become back in the day, this is one thing I can say about our parents and grandparents of yesteryear, because they were real good on not going into debt. Today, debt is a normal thing. How many of us got I got Zip and Klarna and all these buy now, pay later. Like you doing that for a whole outfit. Our grandparents and parents didn't do that. They stayed away from debt. They understood that. Now that is a average thing. I think the average household has something crazy amount of debt. I gotta look, I'm gonna put it up there. But the average household is in debt. Back then it wasn't like that. The average household wasn't in debt. The only thing most people went into debt for back in the day was their house. People wasn't leasing cars how they leasing cars today. There wasn't no buy now, pay later, so they definitely wasn't doing that. So we gotta understand that. And also the dual income is not even optional no more. Like you can't even have a one income household. Like that's very few far in between that the husband working and the wife staying home. Like he gonna have to make a substantial amount of money to fill in that gap, because dual income households are natural now. That was not a thing back then. So those are the few major shifts that changed the middle class, or that is changing the middle class. Also, the new divide. It's not just rich and poor anymore. Like, it is not rich and poor. Like, that used to be the divide. Now, it's asset owners versus only income producers. That is it. Because what happens is, if you own assets in times like now, when prices start getting pressed down, people start losing their jobs, the jobs not coming back, inflation is high, the Fed is, in between of what they want to do. We are in and we at war. Like we have so much uncertainty going on right now that when you lose that income, it's going to hurt you substantially. When you have assets that you own, then you can kind of ease the pain, versus if you have assets and you lose your job, or you still got assets. But if you only have income and you lose your job, I don't care if you're making $150,000 a year. Like eventually that's going to hurt you. Like you would have had to save up millions. Like, and how many people got millions of dollars saved up? So that's the new divide. Before it was like income actually meant something. He made $100,000 a year. Even though you are technically in the 1%, but it's still people making $100,000 a year. That's paycheck to paycheck because of the higher cost of living, the debt. They got cars leased. They got 2-3. The average household probably leasing 2-3 cars. Like, so we got to add that all on, and the wages is not keeping up with the pace of inflation and all that. And just because you got a high income don't mean you know about inflation and interest rates and all that. You just got a high income. So we have to understand that. And in times when prices get pressed down, assets don't get pressed down. That, like, you still have your house. Your house is not going to drop off of, like, the value of your house is not going to drop off of a cliff. You see what I'm saying? Like, so it's like, as long as you can hold on to assets, then you're going to be way better than just having an income. You can scale your assets, and your assets work for you while you sleep. John Hope Bryant, he is the OG. He always say, you work, you make a living during the day, but you build wealth during night. You build wealth in your sleep. Sorry, you make a living during the day, but you build wealth during your sleep. So if you own assets while you sleep and the economy going down, you cool. You going to sleep. Like, you ain't worried about that. Like, you still printing money, especially if it's an income producing asset. Then you ain't even got to worry about that, because you still going to be making money through the downturns, through everything. You still making money and you still own the asset versus just having an income. So now, Why people feel stuck is because like they doing everything right, man. And that's why I had to make this channel, because I figured it out. Not saying I figured life out and all that, but I figured the game out that they try to play with us. That's why I say so tuned in and tapped in to always paying attention to what's going on, because I figured out where to look. And that's why I'm trying to put people on game, because it's not as hard as you think it is. It's not as complicated as you think it is. Once you know where to look and once you can break down what they saying. And honestly, you ain't even got to break down what they saying, because once you tapped in enough, it's all gonna start making sense. You can be like, oh, that's what a yield is. Oh, that's what interest rates is. Oh, that's how they, like, it's going, because you're gonna hear different people keep saying the same thing different ways, and it's gonna click. So you just gotta get in a habit of always knowing what's going on in the economy, because it's affecting you one way or another. If you think, oh no, man, well, I'm a dope boy and I'm on the block, man, that shit don't affect me. Yeah, all right, until ICE comes swinging around that motherfucker. Like, everything affects everything with this economy. It all goes, like, who's in office, their political, like whatever that administration is doing, that's going to affect the market. Joe Biden ran on green energy. What you think green energy stocks did during his administration? You see what I'm saying? Like, Trump big on war. So what you think defense stocks going to do during his administration? Like, once you know where to look and you, oh, all right, I'm just going, oh, let me see what's going on right here. Oh, let me put some money here. Like, you ain't going to be so torn and so emotional about the headlines, and when Trump on TV just blatantly saying some bullshit that you know ain't true. Like, you ain't gonna be so emotionally tied in. You can be like, oh, all right, I know all right, now let me see. Now I know where to look. Now I know what he's saying. Now I can actually prepare myself and my family better. And that's all it is, man. So, and a lot of people just don't know that. So, like, a lot of people work hard, they pay their bills, and they try to save. Like, it ain't going to happen. You're not saving your way to financial freedom. You're not saving your way to $1 million. You're not saving your way to retire rich, healthy, and well. It's not going to work. You have to invest. All right? So stop running harder and think you're going to get further along. Like, you running harder, but you don't realize they just sped the treadmill up more. So you run and you just staying in the rat race. So how should we move in this economy? Stop relying just on one income. I always say that. Like, get your side business going. When you get off work, make sure you put an hour or two into your little side business, your side hustle, because in a year or two, you never know what that side business or side hustle could turn into. That can actually supplement your income, and now you actually losing money by staying at that job. And then we could get into how you can roll your retirement fund, and you actually controlling it yourself, and your self-directed IRA. Most likely it should be like a raw 401k, so it could be, tax-free. So, like, once you start doing all that, it's like, oh, all right, bet I ain't even worried. Like, I'm cool. Like, I done dotted my I's and crossed my, I dotted my I's, crossed my T's. Like, so we have to just stop relying on one income. Also, shift from the consumer mindset to the owner mindset. Stop thinking that you have to be an entrepreneur to own something. That's not the case. And I hate that the internet has made y'all think that, like, oh man, I gotta have my business up to $1 million to be a millionaire. Yo, most millionaires live right next door to you and you don't even know it, because what they feed you is not facts. I'm gonna say that again. What they feed you is not facts. So stop digesting that nonsense. Like, go from a consumer mindset to an owner mindset. You don't gotta be an entrepreneur. You don't gotta start a business to own something. Own your house, own your car, own some stocks. Bam, that is the formula right there. If you want to get into business, start your side business, start a side hustle. Honestly, you don't even really got to be an entrepreneur for that, because there's so many business that's passive. Like, you do your research, like, but it's just so many other ways you can not have one income and get out of that consumer mindset and shift over into an owner mindset. Also, be strategic about debt. I'm gonna say that again. Be strategic about debt, because debt is not bad. Debt is not bad. Don't believe that. Like, that's where our grandparents and parents went wrong. Like, even though they did stay away from it, which is a good thing, but the thing about debt is it can get you there faster. It can fill in the gap. And long as you're supposed to do what you're supposed to do, you don't over leverage yourself and all that. Like, debt is a good thing. You just got to know how much to take on. When should you take the debt on? Like, right now, it's not a good time to take on debt because everything that's going on, like, all of that plays a part. So it's not just, oh yeah, debt is a bad thing. No, you got to be strategic about debt, especially that high interest. That's what you want to stay away from. That's what you want to stay away from. But debt is going to get you there way faster. Why do you think everybody from all these other countries so hyped to come here? Because they don't have a debt system. So they have to actually save up. Like, if that house over there cost $100,000, they paid $100,000 for it. Ain't no they went to the bank and got a loan. They don't have systems like that over here. That's why they come over here, build their wealth fast in 10 years, work their ass off, and then go back, build their house. And we like, man, they cheating, man. They give them opportunities that no, they just understand, oh, snap, I can get my credit score right, and then y'all gonna front me the money? Bet, like, as long as I can pay it back, and then y'all gonna front me more money because y'all my name good now because I'm known for paying my debts back. Like, once we know that and actually take full advantage of that, like, the game become way easier. And also, you want to focus on skills that's going to increase your income ceiling, not just your job security. Because we already went over job security ain't what it is. But I mean, job security is what it once was. But however, you can get this job and gain skills while you're there. You get a job or whatever, and you get your whatever, your CDL, or you got your certain certification while you're there. When you leave that job, you take that with you. So while you at a job, and I used to always do, no, I ain't trying to move up. I don't want to. No, while you there, move up. Take advantage of everything you can get. We already went over. If they got a retirement account, which they most likely do, take the match. If they match you up to 2-3%, take the match and put as much in there as much as they going match you, so you can max it out. You want to take advantage of every opportunity that you can. We can't leave a crumb on the table because somebody else gonna pick it up. Best believe it. All right. And lastly, play offense, not just defense. And what do you mean by that, P? Don't just save. That's defense. I'ma save. No, save. I'm not saying don't save. Oh, we already went over what you should have before you even start investing. So you should definitely have your savings account, specifically in a high yield if you want to get real. But have some money saved, but you gotta save to invest. You're not gonna get there without investing. Stop being so scared of this market. It ain't no boogeyman in there. It ain't nothing to be afraid of. Start putting some money in the market, because that is you investing in the market in 10 years is going to increase your net worth astronomically. Like, I can't even put a percent on it because it depends what you investing in. But I guarantee you'll have more money in 10 years than you would. If you'll have more money in 10 years investing than you would if you didn't invest. And I don't care what them stocks did. I can guarantee that. So we have to play offense and not just defense. The closing thought, y'all. The middle class ain't disappearing, all right? It's just redefined. It's just a different definition. It's just different rules to the game now. Like, before it was one income, now it's two. So don't get discouraged. Y'all two come together, y'all make one, and then now y'all bet. Now we can save this money. Now we can invest this money. Now we gonna pay off this debt. Put y'all debts together. Oh, you got the highest debt. We gonna put our money. You got the highest interest on your debt. All right, bet. We gonna put our money together. We gonna pay off your high interest first. Then we gonna pay off one of mine, and then we can ping pong. And then we still could get there faster because we working together. Don't look at it like, oh yeah, man, it's take two incomes now, and I ain't never gonna get there. No, you still can get there, but you just gotta be strategic. Also, the people who don't adjust, they just go on, like I said, end up running harder, but the treadmill has sped up and they don't realize it, so they think they running harder and they think they gonna get something different, when most likely you're just gonna get the more of the same that you already got, because you don't understand where you run into in the first place. You don't understand that you could actually step off the treadmill. Like, you don't understand that. So in this economy, how you move matters. So you want to make sure you understand the market cycles, make sure you understand the interest rates and what the Fed is doing, sure you understand the whole game before you just start jumping in here and trying to build your wealth. No, we're going to build it the slow way. We're going to take the steps to the top. You know what I mean? Like, well, what E and them say, brick by brick. That's how we building it. You know what I mean? But something new I'm going to start doing for y'all, man. I'm going to give y'all a stock pick of the week, man, because it's something I'm definitely looking at. I'm always looking at stocks, but it's something this week I'm definitely looking at because it had already dropped and then it dropped some more. I said, ooh, baby. So if you ain't tapped in, make sure y'all tapped into the Buck Bandit podcast because me and Buck Bandit Reno actually have a joint investing account. You know what I mean? So I'm probably going to put this pick in that account because I already got some of this in my retirement account. So my stock pick of the week, boy, Alphabet Class A, man. I already got Class C shares in my Roth 401k, and I hate doubling down, like buying the same stock in different portfolios. I don't know. That's just me. I mean, you could do that, but I just don't like doing that. So I got some Class C shares of Google in my Roth IRA, in my Roth 401k, I mean. But I'm looking at Google, man. Alphabet is under $300 at the time of this recording. That is looking very juicy. I am not gonna lie. It still could fall. It still got a little bit more room to fall. It could fall about, I can see it fall about another 5-10% from here. Like if everything go to shit, this war keep going on longer than expected and all that. But Google is looking juicy because if you was on that last earning call, boy, they got some stuff coming. Gemini is a real competitor in the AI space. Like all the other stuff they doing, all the partnerships they got coming. YouTube ain't going nowhere. Y'all probably watching this, or you watching this on YouTube right now. Like Google ain't going nowhere, bro. Like, so to see this stock under $300, it looks very juicy, and I'm definitely putting some in the joint account with me and Buck Bandit Reno. So make sure y'all tap into the Buck Bandit podcast because we gonna put the screenshots up on there when we buy some of that this week. But yo, listen, that's my stock pick of the week. Make sure y'all tap in. That's not financial advice, but I'm just letting y'all know what we doing. So you already know, appreciate y'all for being here, man. That's the episode, man. It's been another one. You already know, man. Get your free stock down below. Click the link in the bio. All that so you can get off the sidelines and start actually printing some of this money with us. You know what I mean? And you already know the motto, man. Let's go out here and get this money.